Hello, good morning, good afternoon, depends where in you're settling the word. Live analysis webinar in all our social media, uh, in um, in GoToWebinar as well. So some of you have registered in order to attend. Live analysis, this is your session. We started doing this lives in GoToWebinar as well. You could ask anything you want. We are here to help. This is your session. Feel free to stick in the box, the question box, any asset, any question about the political scheme, the economical scheme, the whatever you want, or and assets as well that you want me to analyze from a technical and um, fundamental perspective. I'm here for you for the next hour. So this is recorded. So for those that you have registered via GoToWebinar, uh, you're gonna receive it in an email, so the recording. So don't worry about it. For the rest, you can see me in the social media: Facebook, YouTube, LinkedIn, Twitter, and etc. So I have already. Okay, hi, Afak. Hello, welcome. How to identify a trend? A very good question. Okay, we're gonna see there are plenty of times, there are plenty of trend indicators or ways to identify a trend. I will try to present some today, dear Elia. Emma, I have seen your DAO question. Okay, let me quickly brief up a bit. Okay, what is going on today? Okay, just give me a second. Okay, yeah, we are. I need to minimize myself. Okay, so let me quickly go through the calendar. So we had a very, very interesting week once again, even though thank God UK has calmed down a bit. I mean, the situation from the in the UK and the all this turmoil with the politics has eased a bit, but um, the focus today and the big highlight of the day, if you prefer, is the inflation from UK and the inflation from Canada. UK actually show that inflation pressures are here, they are present. We'll still see inflation rising, or if you prefer, not detecting, not coming down after all these tightening and actions that the central banks have taken. So this morning was a bit um, not difficult, but a bit weird for the pound, for the FTSE, because after all, a higher than expected inflation, guys, pretty much points to a single direction, points that the bank needs to take further action. And now the chances of the odds of 75 points hike in November from Bank of England are really, really likely, regardless of the tax plans, of the spending cuts that the government will proceed. Since the inflation came higher than expected, the Bank of England need to take action, and the only way to take action is by proceeding with the tightening path once again. So that was the news so far from data perspective. So the UK today acted as a reminder that the inflation are still there. Further tightening is needed, even if that means that the growth will slow down. Okay, so it is a threat for next year. It's a big threat because it points to a recession, even though recession is already it already, I mean, started. But it seems that uh, this is getting more and more likely. So, as I said, the next important event of the day is the inflation from from Canada and the building permits from US. Okay, so yeah, I think I'm gonna just shift into the platform, and we're gonna take it slowly from there. And let me just have the question box. Good afternoon in the GoToWebinar for Humphrey, if I pronounce it correctly. So, Okay, shall I start with the questions, or you want me to? You have any fundamental uh, question for me before we do the technical analysis? Why are you not informing me of the time of meeting? I just got you by emergency. Okay, okay, Ali. Ali, it's my bad. It wasn't scheduled. It wasn't scheduled. Okay. Uh, yeah, I didn't schedule this email. I was set that okay on Wednesdays when we would try to do every Wednesday live analysis. Okay, yeah, this time wasn't scheduled, but thank God you got a notification. I guess if you follow us in YouTube and Facebook, you tend to have a notification. But you're right, I didn't send either a push notification in the application in the app, in the HFM app. So okay, I'm gonna take it a bit vice versa since I have uh, gold in front of me. I'm gonna start with Mr. Mohammed Shaikh. So, okay, you mentioned gold, and gold is something that I keep watching since morning because okay, this is the 1 hour chart. First of all, guys, okay, this is the 1 hour chart, and we have seen that there is a new resumption of the downtrend. But what I would like you to see with me, this is the daily chart, okay? It, if you can see, we had two floors, two key support levels intraday, near-term support levels for gold in October in general. Okay, so the very first one was back to, I'll be more precise, back to September latest down fractal. So 1650 to be more precise. Let me properly set it. Here it is. 1650 was the very immediate support level that was broken last week. So this is the Friday's candle. Here it is. Is a Friday, which closed below that level. So that was the very first trigger that that there would be further bearish momentum for gold. Sideways a bit on Monday and Tuesday, found some support, but eventually broken that level and extended further downwards, breaking the latest down fractal over here, which was our next support level at 1639 territory. So that was broken. So really, if you just focus on the chart, okay, the next floor that we could see is back down to September's bottom, and the 16 let me be precise, 1614 territory, 1614.70. So let me be, it is, that's the bottom that we have seen back in September. So this is the very next support area for gold. And if we closely check the momentum indicators in this daily chart, we could see that the MACD since last Friday started extending southwards, suggesting that slowly, more and more sellers are entering the gold market. On the other side, RSI, I will enlarge this a bit so you can see. I think you can. Can you see that since the beginning of October, I will say, let me check when that peak was. It was on the 4th of October. Since the 4th of October, it started moving downwards, posting lower highs. So RSI, even though it hasn't crossed below 30 yet, is slowing down and slowing down, implying to what we said earlier. Further bearish and increasing bearish momentum for gold. Okay, so next floor 1640, and if that breaks, then that would be something very important. Why is that? Because that used to be the last 2 years support territory. So if it breaks, then we might see a free fall, because the next floor for the next potential support areas for gold are way lower. So 1600, 1500, and even 1400, 1400, 1450 to be precise, which takes us back to 2019 territory. Now, I know that you don't really like me analyzing weekly or daily. You are more of a scalpers or intraday trader. So I'm going to go down to the 1 hour chart or even 30-minute chart and see what happened overnight and so far today. So that's, let me just here, that's the days. So that was the open, broken that 1650, which, as I said, it was last week, it was September's, it was one of the latest down fractal in September, extended lower, sharply lower, consolidated around the last week's bottom, and eventually managed to break it, extending lower. So what we have seen in this 30 minutes chart is that there is a near-term negative bias once again. So this is a full body candle with no tail, neither to the downside, neither to the upside. So what that means, if you see something like that, a full body candle without no tails, it means that sellers are in control. And we can see that because the next candle also closed bearishly. So moving average also still a line lower. MACD is down, RSI is down, even though it crossed 30, there is further steam. Sorry, there's further area to be covered. And my intraday stochastic indicator, which is the short-term one that we're using, is you can see I've changed the settings to 533 because I use it for 1 hour and 30 minutes chart. You can see that it's still, regardless how oversold it looks, it hasn't really, still pointing down. Okay, still pointing down. So there is some steam. However, I need to highlight, guys, that I will zoom out a bit. It's already outside Bollinger's, so it might need a correction. Either something like that, a sideways move to get him back, to get it back into the Bollinger Band area, or a bit of a correction to the upside before we see it resuming into the downside. But there is definitely a heavy selling over here in gold. And this looks quite reasonable, to be more precise, because we have sorry, and this looks reasonable, I was ready to say, because of the fear that I will just okay, because of the dollar strength, first of all, and mainly due to what the market are speculating for the rate hikes. So remember, okay, gold is inflation hedge and etc. But if we see markets buying dollar and see dollar getting stronger and stronger, there is a cash flow from the gold to from the safety of gold to the safety of dollar. Okay, so gold is mainly driven, and we'll get you back to gold, due to the strong dollar, okay, and to the treasury yields. Both the dollar and treasury yields rose today. Let me get back to the gold. Where is it? Gold, here we are. They both, dollar and treasury yields, rose today because all the data that we're getting from the Bank of England, from ECB, from the US, everything is pointing to more and more steep interest rate hikes. Okay, so that reduce the benefit out of a non-yielding metal such as gold. Gold is a non-yielding metal, so the fact that yields are rising, it tends to be more attractive for investors, because by investing in yields, they're gonna get more profits back than investing in gold. And this is what's happening over here. Okay, so it's oversold. It might need a bit of a correction or a small rebound in order to get back to the Bollinger Band area, but overall remains under pressure with the next support down to September's bottom. Okay, now professional forex. I cannot advise. Okay, this is prohibited. Uh, I'm just saying what I see based on my indicators, based on the news, based on the fundamentals, on what the central banks are about to do, and basically my indicators. You can see my indicators. MACD extending. If I connect the histogram lines of MACD with a line, it looks bearish. You see that? Even though the signal line is above it. I show you RSI. You can see the body of the candles breaking key support levels, etc. I cannot advise you what to do, because this is all, it depends on you, and also which time frame you are trading. I mean, I have analyzed daily and 30 minutes. I don't know your system. I don't know what time frame you're trading, and I don't know what is your risk and reward ratio. What kind of risk management you're doing. So I cannot really reply. So I'm trying. Uh, I'm not definitely a scammer, dear. I'm just trying to help. If someone wants to listen, feel free to join us. If not, that's totally up to you. So um, so as I was saying, yeah, I don't know your system. I cannot advise further. I'm just analyzing what I see based on my setup, on my on the indicators that I am using, and the support levels and resistance levels that I have I find identify. So I need to take so USA 30 stocks have been, they are and they will stay in the spotlight, obviously, because after we have been in a very bearish market year for stock, it's a bearish year for stocks. This is something that is quite common if we have the possibility of a recession globally. Okay, if you compare 2008, the global recession, etc. The stocks, you have seen that the stocks have suffered significantly this year. So you mentioned Dow Jones. We're in the middle of, actually, we are in the beginning of an earnings season. I don't want you to forget that, guys, because this is what it actually, if I put the daily chart of USA 30, okay, this is what actually supported a bit the last this week, okay, the US indices such as Dow Jones, Nasdaq, etc., because we had some better than fear earnings from Morgan Stanley, from Bank of America, which actually beat expectations, from JP Morgan, that even though it showed a bit of a slowdown, it was in a better than what the markets feared. We had Netflix last night also presenting a stronger than expected report with a revenue, with global subscribers are 2.4 millions, and etc. So the earnings for the time being, okay, they are supporting the US majors such as Nasdaq, USA 30, and S&P 500. So yeah, Dow Jones has been affected along with Nasdaq from the Netflix subscribers turnaround, if we can call it like that. So it's a big streaming giant. So it was in the spotlight. Today we have Tesla. Don't forget that tonight. But the fact that the Netflix jumped 14% in after hours is what provides some kind of support to the US 30 yesterday night. But now I guess let's see what's going on right now. Okay. Um, so let me check again your question. You're just high, please. USA 30, of course. So I'm gonna start again with the daily chart. Let me just use my black template over here, zoom in a bit, and I will, no, here it is. So after August and September's drift, the asset found support over here. Okay, found this. This is very interesting, dear Emma. And for those that are interested in USA 30, I want to zoom in a bit to show you something. Come on. I want you, can you see these two fractals that I have over here? They are nearly at the same territory. So this is a nice floor in which the Dow Jones hasn't managed to break. Instead, it seems to be a strong support level. So after 2 months of a sharp drift, it found support over here, tried to recover, came back down. That was an evening star formation, and it jumped again last week, breaking that resistance area. This is a resistance area, used to be a resistance area, because the asset posted over here and an evening star formation, and also is a confluence. It used to be a confluence of the 20-day moving average as well. So, and it's our latest up fractal as well. So that it was our immediate resistance level, which has broken yesterday with the asset closing above it. Now, the tricky thing over here is whether that was a limited move and the asset will get back within this range between 2870 territories, 28,700 territory and 30,500 territory. It looks that it will turn back within this range. Why I'm saying that? Because you can see that the moving average has flattened. Bollinger looks to flatten as well. RSI is at 50. So let me just put the line over here. It's at 50. Okay, you see it's at 50, indicating a neutral consolidation. So a turn back here, okay, a return back here could retest initially the 20-day moving average, and if that breaks this bottom, this strong support at 28,700. Overall, have at the back of your mind, guys, that overall the trend remains to the downside. Okay, we keep having, my dear, someone asked about the trend, how to identify. Elia asked about Jeremiah. Elia asked about how to identify a trend. There are several ways to do that. Okay, one way is to try and connect more than 3 consecutive highs to see whether, so here it is, I'm gonna just, okay, and you see that by connecting and trying to connect the highs, we can see that it keeps posting lower highs and lower lows by using also technical tools such as the regression channel over here. Okay, it gives me a path, a channel in which the price is moving. You can see that it's pointing down, so our asset is in a downtrend. But US 30 is something that we should keep an eye on, because yesterday, other than breaking that resistance over here, it also exited the channel that we used to move in since August. Let me just try to use the linear regression channel to see whether it satisfies better our asset. It's just okay. Just giving an extra support and resistance level, which might be helpful in the future. Let's wait and see. So here is the tricky part today. How we will close. Will it get back to the channel, reversing all the gains that we have seen yesterday and suggesting a pullback down into the 28,000 territory, or will it signal the beginning of a new trend to the upside this time? So even though momentum, so there are a very mixed conditions over here. We have a rally, but it looks to be temporary, so we need further clarification. And we have mixed signals from momentum indicators as well. RSI is at neutral, suggesting that we might enter consolidation, and also the Bollinger's have flattened, something that also supports the scenario of a consolidation. But MACD on the other side is rising. It is in a negative territory, but is rising, suggesting that the momentum might shift from negative to positive. So it's something that we should keep an eye on. Intraday now, for those that are intraday traders, let's use the intraday setup. Okay, so I used to have a descending triangle over here. Let me just put my lines on, connecting. So look at that. It was moving like in a pretty much triangle, while you saw some fresh selling, okay, an hour and a half ago, breaking that latest fractal over here, that immediate support that we had this morning in the European session, and exiting the triangle. However, if we just emphasize on the on how narrow, on how, can you see, this is the fast moving average, okay? The green and yellow are my fast moving average, the 9 and 5 exponential moving average. Despite this drift, they look a bit they are looking ready to reverse. They are not, the slope is not significant. Okay, and also RSI already started to move up higher again. So it seems that there might be some kind of a, that way it looks to be for the time being, some kind of a limited drift. So 30,120 remains a support area, also coinciding with another latest down fractal, while only a break below it could open the doors to 3,300, which is quite significant. Why is that? Because it could complete this gap and could alert the could turn the attention into 200 moving average and the 30,200 territory. Okay, but only if we see the candle strongly crossing and below the 30,420. So hopefully that was clear. But if I just stick on the 30 minutes chart, you see it already found support. So that's neutral for the time being, unless we see a breakdown of this immediate support level. Okay, USA 30. Am I once again the USA 30, but 4 hours? Of course. Okay, let me just delete all these supports and resistance levels just to take it from the beginning again. This is the 4-hour chart. Very, very interesting, I will say. 4-hour chart as well. So it depends from what kind of trader you are, basically. Okay, but what is interesting, and why Emma put it on is because it's retesting the 200 period moving average. Is that right, Emma? So nice, but nothing really, no clear signal yet. Why I'm saying that? Because this for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 session, 10 4-hour session in a row. Just okay for 10 sessions in a row, it managed to hold above this 200 moving average, right? You see that, guys? It held above it. We had some long tails, but failed to either move up or high. It hold this as a key support, and that remains a key support because it comes in contrast with the momentum. Momentum is still strong. So, dear Emma, here we want a clear closure of the 4-hour candle below the 200-day period moving average in order to imply to a reversal of the trend, of the uptrend that has been seen for the last week. Okay, so this is a strong support level. As long as we don't see the candle closing strongly, decisively below it, and because at the same time we've seen that MACD is still positive, RSI holds above 56, so there is some fight from bulls still. This looks more or less neutral. Okay, so so if I put my Fibonacci's on, yeah, it's okay, very interesting. It's also confluence with the 23.6 Fibonacci level, which is not a strong retracement level. So if it fails to break it, and I would be more precise there, Emma, support is here. So because you see the 20-day moving average, if the 20-day moving average breaks, so if the 30,315 level breaks, that will mean the breakout of the 200 period moving average, the breakout of the 10-day support, the breakout of this latest fractal, the breakout of the 23.6 Fibonacci level, it will complete this tiny gap over here, and this is the only strong signal in order to suggest that it could turn back down and retest the 30,000 level. So we need to see the asset, the candle closing below this area, below the 30,315. That could imply to a retest of the 50-day moving average, which also coincides with the 38.2, okay, and even lower. But for the time being, it's a very strong support, so we don't have a clear indication that it will actually manage to break it. Is it advisable to trade when news is coming out, like the moment it comes out? I will say that again, it's up to you, my dear Hilary. There are a lot of people that trade the news. Yes, trading the news could be effective. But you need a very strong risk management, okay? And to have in mind that there are some events such as NFP, for example, that they are so volatile that they could do that, literally. They could go up and down, hit your stop loss, and eventually turn on your direction. So trading the news, yes, it could happen. It is and a lot of people that trade the news, and I have even presented a webinar on how to trade the news effectively. So the number one thing that you need to have in mind is a strong risk management, is to do your own risk management properly, because if an event is extremely volatile, it could stop you out before it moves on your direction. That's the tricky part of it. Okay, and obviously if there was a surprise on the results, but Please go to our past webinars and have a look on the webinar called How to Trade the News Effectively. Okay, I think this is the title of it. Which is the best time frame to enter a trade using fractals to go to know the committed stage of? Okay, fractals could be used in any time frame, but you need to stick on it. Okay, you need to stick on it. I as an analyst, I have to go through the time frames, both the medium term ones such as daily, both the short term ones such as 30-minute chart, because there are so many of you and with different personality, different strategies, and etc. There is no right or wrong there, Owanka. I want you to tell me what has worked from you so far. If you tell me I tend to do very good in 1 hour chart, then use the fractal on that, on your existing setup. Don't go up and down, changing time frames and etc. I'm doing that because you're too many and I have to cover all the as much as I can. But if you have an existing strategy which works for a precise time frame, stick on it, add fractals, see whether it gives you some timely trigger points and etc. And use it, but try it first. Try whether it satisfies your existing setup and it doesn't mess it up. Okay, but in general, fractals are quite straightforward. A breakdown of a break of a fractal gives you an entry level either to the upside or to the downside, with the next immediate fractals being used as very nice support and resistance levels. Yeah, but remember, you need to have a confirmed breakout. I mean, for example, you see, oh, okay, over here, for example, let me zoom in a bit. Okay. Okay, I want you to be careful with fractals. Okay, this over here I have a fractal, and here I have a fractal, and here I have a fractal, but I cannot use them. I shouldn't pay attention to them. Why? Because they're doji candles, and every fractal, the theory behind every fractal suggests that a fractal will be created in the middle of a 5-candle pattern, with the middle one being the higher of all or the lowest of all. So having 2 fractals in a row, that's prohibited. This is a wrong signal. This is wrong. This means that there was a lot of indecision and it gave us 2 consecutive fractals. So this is not. Have a look on my webinars for fractals, okay? So I cannot use this over here as my support and resistance level, potential support resistance, okay? So this is what you need to be careful about fractals. The same stands here. No, if you see 2 consecutive fractals, that's a mistake. Just ignore them. But the other thing that you need to take care of is that if you have 2 consecutive fractals really close to each other, I mean, pretty much they are in the same level. So that makes the support area in this case even more strong. So the breakout of it, like what happened here, it was a very strong signal to the downside, because in this area we had 2 down fractals. Okay, and it was decisively close. We shouldn't trade an entry here because it just touched it. You need to wait for the candle to finish below it in order to suggest that this is a bearish strong signal and we can go short. Are you with me, dear Humphrey? Hopefully you are. Macheka, you're saying what indicators will recommend highly to use? I cannot recommend. I can say that I like the ones that I'm using over here, but that's upon your discretion. You need to use only the ones that make sense to you. If my MACD, for example, doesn't make sense to you, don't use it. You need to stick to two or three indicators that you can understand on spot, that you can that is easy for you to understand, and you have tested them, and it gives you nice signals for your setup. So whatever makes sense to you. The only advice that I could give you is not to use too many, okay? Because it gets a bit complicated. I know that my chart looks a bit complicated, but because I have to do a lot of demonstrations. But two indicators and maybe two indicators at the bottom and maybe another one or two indicators on the chart are more than enough. Try to keep it simple and use only the ones that you understand. There are people that they don't use any indicators at all. They are price action traders. So they solely measure and check the body of the candle. I mean, that's excellent as well. I mean, it depends from you, solely from you. Okay? Okay. Now. Dollar yen, still bullish. Okay, guys, what I will say for dollar yen. I'm not sure. I would really like if I could like hear you instead of asking you a question. But have in mind, okay, it's what I always say. Dollar yen, it has been to the upside since the last 2 years. Why is that? The central banks. If the Bank of Japan keeps negative interest rates and the FOMC has reached nearly 3%, the differentiation between the interest rates is what is driving the dollar stronger than yen and yen weaker than. And so it's pretty much in one way. Now, the tricky thing with yen from a fundamental perspective is the intervention from the Bank of Japan. So they tried to intervene in order to ease a bit the rally of dollar yen. They failed, so the risk is that they might do it again. Okay, so however, the momentum remains strong. Okay, but there is a very strong resistance area at 150. Okay, so as I was saying, I think it was this morning to my colleagues over here, is that the risk for yen is the intervention of the Bank of Japan, but because because they might intervene in order to limit this selling pressure of yen. But if we just solely focus on the technical side of dollar yen, okay, we could see that the momentum is really strong. The fact that it has exited in the European Open this range that has been seen yesterday, posting higher highs, with Bollingers expanding, all moving average pointing further to the upside, RSI still rising, stochastic rising, MACD rising. It looks that the market will try to retest this key psychological level at 150. Okay, so this is a very important level. Very important level. And given the fact that the Bank of Japan positions as the only developed market central bank that it keeps those negative interest rate policy, it is hard to see the pair not to breach at some point the 150 or even the 155 territory. So the fundamental perspective, the fundamentals support that the dollar yen eventually will break 150, and it could even move as high as 155. From the technical perspective, it's still, yeah, you see how strong the momentum is. This is a weekly chart. Um, the closure last week, it was so decisively that it found more support. The daily chart, it has a lot of cautiousness. We can see that the bodies are smaller, the bodies of the candle are smaller, but slowly recovering. So it's a bit overbought right now. You might see some consolidation, but the attention is really still on the upside for dollar yen. Considering the strength of the dollar, considering the central bank policies, and etc. So if you want me to analyze intraday basis, my dear, who asked for it? It was Rudy. My dear Rudy, this is the 30 minutes chart. Indeed, it looks that it needs some kind of a correction. It was overbought. It closed outside Bollinger's. The fast moving average are a bit still pointing higher, but the fact that we have, I'm going to zoom in a bit. Can you see, my dear Rudy, that stochastic over here posted a bullish cross, a bearish, sorry, cross. Can you see that? It posted a bearish cross. The green is below the red, so my fast line is below the slower line. And also the RSI flatten a bit. Can you see that, dear Rudy? So what this suggests is that there is a strong momentum to the upside, as we can see from the MACD and from the price action, but it might correct a bit, consolidate, or have a small correction before another attempt to the upside. Okay. So there is only 5 minutes to go until this candle close, in order to see whether a bit of a correction like this one will follow, or some sideways movement before another attempt to the upside, but overall remains positive. Long-term support for Shahid. Okay, yeah, sure. Getting back to gold. As I said, 1614. The low level back in September is the immediate support level. Okay, but you mentioned long term, so I will go back to. I think I mentioned it before, dear Shahid, but I'm not sure whether you were here with us or not. The break of this level, dear Shahid, and consider that we have 1, 2, 3, 4, 5, 6, 7 consecutive negative months, a break of that level could open the doors to 1500s, or even 1455. But we need a confirmation. We need a breakout of this support over here at 16,000. So have in mind, keep an eye, keep a line on 1600s, round number, the 00 number, okay, 1600s, because a break of it could, you know what, I'm gonna double check. Nice. Okay, Shahid, if you're still here, have a look. The 1614 territory and the 1600s lies on the 50 Fibonacci level in a monthly chart. So that could open the doors to 1510 territory, or even 1455, which is the support that we have seen for 1, 2, 3, 4, 5, 6, 7 months in a row back in 2019. So this is the long-term support areas, but only if we have a break of this 50, zoom in, 50% Fibonacci level, the areas that I have mentioned, the 1600 territory. 1600 territory. I don't understand your question, dear Humphrey. Must we wait for a crossover of MACD for multi-time frame before entering a trade. I'm not sure I understand what you mean. No, I'm not sure. Yeah, yeah, I'm not sure what you mean because um, MACD should be in line. What your MACD signals should be in line with the rest of the indicators. If not, then you have mixed signals and you shouldn't really proceed on entering a trade, if that helps you. What? What did I say and you didn't understand? I don't remember. Sorry, Hussein. Muhammad, it was a long time ago. Update, please. 1680 going up. Mm, wow, 1680 is way, way higher, dear Shaikh. And it looks like we have more and more selling pressure in gold today. A way to get back to 1680, you said? 1680 is up here, which is take us back to last week's, no, more than last week's, on 11th, 10th, and 11th of October. So in order to imply to a potential rebound back to 1680, we need to see the asset. Wait a minute, we need to see the asset. No, we need to see the asset turning. Wait, just a second, please. So this is the decline that we have seen for 2 weeks, more than 2 weeks. So in order to get back to the 1680, it should rebound and it should come at least back to 1660 territory. So somewhere in the mid territory of 23.6 and 38.2 territory, but it's a long way until then. Momentum doesn't support such a scenario. I cannot really tell, dear Muhammad. It looks unlikely for the time being. We don't have any strong rebound. We don't. It's just you can see the candles. It's just yeah, continuous pressure. Good day, Billy. Pound bullish or bearish? I like that you asked me, but as a market analyst in HFM, from legal perspective, I'm not allowed to advise anything. I'm trying just to help, as I said. Okay, broken my descending my descending triangle. This is the pound in 1 hour chart. That's very interesting how I missed that. It broke in my triangle, extended lower. Fast moving averages are pointing down. Can you see? They keep pointing down. Bollinger's extending down. MACD turned negative. RSI, despite the fact that it tried to recover, it's still pointing downwards again. RSI, sorry, stochastic. RSI is flirting with the 30 territory, so there is an overall pressure. So let me just check something. Yeah, it didn't find the floor yet. So all that. So the next support looks to be down here. If it breaks the 200 period moving average, is it my exponential? Let me check. Yes, it is my exponential. Very interesting, dear Billy. Let me just have a look. So I'm gonna get rid of this triangle lines, and I went back to the 4 hour chart just because I want to connect the fractals over here. Yeah, okay. Okay, so very interesting. Yeah, There is the momentum indicators are in line, They are all pointing to bearish pressure. This is a decline that started since overnight, but it looks that it's still on. So the next floor is pretty much down to the 111.65 territory, or the very immediate one at the 111.85, just to complete this gap over here. That's very interesting. That's very, very interesting. So broken, extending those. So that has already happened. So we should keep an eye on this gap over here. That's the support area, which the sellers will try to retest. So the 112 and 111.85 momentum. You can see all the momentum indicators agree between them. RSI, if I zoom in, here it is. I will enlarge it. RSI points down. MACD turned negative. Stochastic, even though it's above 20, is still pointing and posted a bearish crossover here. This is the 1 hour chart. So there is further bearish pressure intraday. So that's interesting. Try to recover over here. So, and it's keep extending. Yeah, that's the cable. And just for those that are interested in a medium term, okay, the pound, even though it managed for the whole September and October to recover, there is something very interesting over here, and this is that one. Why is that? Lower highs. Despite the sharp rally, another rally follow, limited one, but with a lower high than before. So that states that, you know what, cable, regardless of this political turmoil, is still fundamentally under pressure, considering the higher inflation, further tightening, strong dollar, energy crisis, recession, distrust of the government, and etc. So the lower high over here, and the fact that it failed to break the 50-day moving average, imply that the negative outlook in the medium term is still on. And it looks to me like sorry, I haven't put it properly as I should. Okay, the reason why I put the okay, sorry, let me fix it. Okay, the reason why I put over here the Andrew's pitchfork is just for the future. I've used Andrew's pitchfork over here because I was wondering whether it will eventually get back to this channel and it will continue downside. So just this is some kind of a homework in order to keep an eye on the cable over here in the long term. But for the time being, the rally was limited, failed to break the 50-day moving average. It posted a lower high in the daily chart. Momentum remains negative regardless of this increase in this improvement. RSI is below 50. So yeah, the negative outlook overall is still on for gold, for cable. Sorry, it's been cable has been in a very, very sharp sell-off the last 2 years, and this doesn't look to change. Okay, so it might be too late, dear Onferi, if you're using the crossover of MACD in a 4-hour chart or 1-hour chart, unless if you have changed your settings. My settings are the default one. So if you're thinking of using MACD for 1-hour chart and use its crossovers as your entry levels, you need to modify the settings in order to give you appropriate signals. Okay, you need to detect the settings. Am I clear? Because, for example, over here, okay, I am in a 4-hour chart. Okay, over here, there was a crossover of MACD in this cable. The crossover, however, confirmed here, because yes, indeed, it turned, but my signal line was below zero. It crossed above zero over here. Then I had already, so over here, I was here. So I had already missed this rally. Have already missed this rally. So if you're gonna use MACD as your dear Humphrey, you want to use MACD and its crossovers as trigger points, you need to try and amend the settings in order to give you some nice and timely signals. Okay, but combine it with one more thing, please. Okay, just to give you trust on confidence on your trading. I did analyze Emma. Yes. Hi, thank you. Receiver needed with a verified code. I don't know what's that, Rosalind. If there is any I'm very good. Thank you very much, Kuram. Thank you very much. Hopefully you are safe and you're okay and healthy as well. I'm very good. Thank you for asking. You're trying to be on the negative side. Oh, Bert, are you using any setup, any strategy? Okay, we have some scanners that you can use, such as AutoChartist. It gives trading signals. It's a scanner and identifies trading opportunity for you. It's free. However, you need to meet some terms and conditions in order to have the AutoChartist. Please visit our website on the products page and find AutoChartist to find out more. But if you feel disappointed, something is going wrong, let me know. Send me an email at webinars@agfm.com. Tell me what you're doing wrong. Show me some screenshots. Show me your setup, and I will try to help. Otherwise, what you need is a scanner such as AutoChartist, please download it. Try and download it and see whether it helps you or not. Hi, Subing. My webinar. Okay. Since you are in Facebook, Ali, the recording will stay in Facebook, so you can watch it as many times as you want. You are referring to webinars that we are doing with Stuart and the rest of the team. You can find it in our website, agfm.com. Click on education, webinars. At the very bottom of the page, there is a line called past webinars. You can find all our webinars over there, okay? Recordings of all our webinars about any topic that we have covered so far. We have seen gold. I'm not sure whether you were here when we were watching gold there. Vituranka is in a very strong selling pressure to the downside. There is a strong sharp downtrend since the beginning of October, and the next real support, it could be seen at 1614 and 1600 territory for gold, while intraday there was some kind of a correction, consolidation, but still the momentum is very, very strong to the downside. So next support is down to 1614 territory, which is, as I showed earlier, is down to September's bottom, or the 15 moving average. This 15 Fibonacci level is the one that I have used by applying. Okay, it's the long-term one, but okay, confusing you, I think, with this way. So what I will do, clear this mess, and it's already happened. Broke. Okay. Yeah. So yeah, the floor is back to September. It's back to September, and so that has broken. This is not broken yet, so there is another intraday support over here at 1625. Takes us back to 22nd of September. So these are the intraday support levels: 1625, 1614. While a break, as we said, of 1600 could open the doors down to 1510, which is the 61.8 Fibonacci level, and the 2019 support territory at 1455. YouTube, okay. HFM, Ali, if you go to the YouTube channel, HFM, which is our company's name, and we have a playlist with the webinars. We have two playlists actually: experience advanced webinars and beginners webinars, and everything is over there. Or you can, as I said, I don't know, can I reply to you right now? Wait a minute, let me send you the link. I will try to send yours, all of you. Let me know if you have received it. Okay, let me know if you have received what I have just sent, dear Ali. A link with all our past webinars, okay? What is this? YouTube. Please, what others can we check on you? Okay, I have just sent it. Let me know if you have it, if you received it, Ali. I don't understand this one. What you don't understand, Husan? Can you repeat, Husan, what you don't understand? Sorry. I'm going downwards to your comments, but you're welcome, dear Obabert. I missed some questions, sorry. What advice can you give to a scalper trader with a low amount of equity? Okay. You need to, okay, what advice? Scalping is a special, it's a whole new word, scalping. So it's risk management. Everything falls under risk management. So if you have a small amount of equity, it's better to stick to some rules. For example, dear Sekha, say that, okay, you have, I don't know how many money you have invested, but let's say that you had $100 invested. You need to stick to some guidelines. For example, say that, okay, I will not expose more than $10 per trade. So you can open multiple trades every day, but you will never you will not exceed the $10 per trade. Or you can you say, okay, I have $100. The maximum that I will risk every day in total, it will be only the 5% of my amount of my balance. So this kind of guidelines, this kind of structure, it will help you, will help. And this is under the risk management um, um, sector again. It's okay, you have a low amount of equity, it's how much you can afford, that's fair enough, that's very respectful. And since you have this amount of money, you have to be careful. So you need to stick to some rules that you will never change. So you will predetermine how much money you want to risk every day, and you need to try not to exceed them. If you have, okay, if you have entered, I don't know how many, 5 trades today, and you have risk only $20 out of the 100 that you have, for example, and something went awfully wrong and you lost those $20, okay? Don't try to recover them. Close everything because you have breached the maximum amount of money that you wanted to, that you decided to risk. So close everything and come back the next day with a clear head and continue. Okay? You need to stick to some rules that you will put for yourself. Yes, and there are many, the institutional players, big players have this kind of rules. They are saying that every day they don't risk more than 5% of their balance, or they don't, at the end of each week, they don't um, um, they don't want to have more than X amount of loss. So they have some guidelines, either daily ones, either weekly ones, either risk management ones. I mean, percentage wise, and they stick to it. If something went wrong a day, close everything and come back in the next day with a clear head and scanning again the markets, find new opportunities, etc. Okay, this is what I can tell you. Dollar still hawkish. The Fed is like the 75 points rate hike from the Fed is really fully priced in. If I'm not mistaken, yesterday that I checked their Kachuri, there was 91.9% odds for the Fed to proceed with a 75 points rate hike for November. So the market are pricing in already November's um, um, November's increase, and so the sorry, so the data today, such as the mortgage rates increase, the drop in mortgage application, is really strengthening the fact that central banks need to proceed with further tightening. Okay, so this is the dollar index. Sorry, I will put the put the 4 out. So zoom out a bit, and this is why we have seen this jump once again. It was on the data because remain in line with tightening. So yes, we had seen some kind of a reversal since last week, with the asset being below 112. Let me put the daily chart on. If I zoom out a bit. Okay, I will show you the daily chart firstly. So what's that? Oh, that left from a demonstration, sorry. Okay, ignore it. So this is the dollar in a daily chart. It's in a clear uptrend. I mean, nothing really changed. I'm gonna use my Andrew's pitchfork. which I have set. Okay. If I set it properly over here, perfect. That looks absolutely perfect. So remains in an overall uptrend. Okay, so the momentum, you can see how strong the momentum is. So in the long term and medium term, dollar remains strong. Okay, so over here you see it crossed today above the 20-day moving average and the middle line of my Andrew's pitchfork. So if it closed positively tonight, okay, then the next area to be watched is back to 113.50 and the top of the Bollingers and the latest highs at 114. Momentum remains strong. RSI remains above 50 points to the upside. There have been some ups and downs, but nothing really to reverse the overall trend. So dollar remains strong until the year end. We need to see the asset um, uh, reverting decisively. I mean, getting back below 110 or even extend losses outside this range in order to suggest that it change. Okay, intraday now. Let me put my setup 5 and 9. There is some consolidation. Okay, a bit of a correction. It was overbought, very reasonable, but latest up fractal, and etc. But you see a bit of a consolidation, but momentum remains. MACD keeps rising higher, so buyers are still on. RSI the same, so RSI is keep increasing. You see that? Keep increasing. Stochastic the same. Stochastic indeed has posted a bearish crossover here, but that looks to be just a correction, okay, before it moves it continues to the upside. A reversal of this intraday rally will be confirmed only if we see the asset breaking and turning below 112. What is it? Yeah, 112.40, 45, yeah, 38.2 Fibonacci level, or even actually it's 2 hours floor, 30 minutes chart. This is a 30-minute chart. Let me just be precise, guys. Yeah. Yes, 30. Use the 38.2 Fibonacci level. Only a turn back here, it could suggest that a pullback of dollar back to the low territory that we have seen this week. But overall, yeah, still on. And we have a crossing and bullish cross of the 9 above the 50 period moving average over here. Fast moving average a line higher. So as long as the asset doesn't break the 12.45 level, doesn't get back here, it remains in a strong strongly bullish. It needs a bit of a correction. You can see that is overbought. So a bit of a consolidation might follow, or even a retest of this level. So to come down, I cannot draw, to come down before another time 10 to the upside, but for the time being, this is the case. So guys, if there are no further questions, I'm gonna call it a date. Thank you very much, dear Uchit. Oh, another question from Seth. Yes, Aussie, of course. But don't know which time frame you want. I'm gonna analyze everything. Let's start with the daily one. It's been to the downside. It's been in downtrend the whole year, but a very sharp one. The latest sharp one started from August in a continuous downtrend. I'm gonna use my linear channel over here, okay? And I want it to be a bit more tightened, yes, to satisfy better. So it's in a continuous, it's in a downtrend, as you can see right now. Is settled in the is settled in the upper territory of this regression channel. But as you can see, the yesterday's candle is a very small body one, suggesting that this was a limited rebound, and momentum is very, very negatively configured. Okay, so the daily and medium term chart remains to the downside, with this correction being just a buying, selling the peak, we could say. It triggers a selling pressure at every rebound. So momentum is remain strongly to the downside. So a flip down could target the confluence of this latest down fractal and the Bollingers at 61.65. Now, in regards to the intraday basis, here we are. We have a confirmed bearish cross of the 5 and 9 moving average. It's an old one. It's been already 3 hours. And there is, okay, it's neutral, dear said. It's neutral. Yeah. And this decline ran out of steam. You see small body candles fail to extend lower. MACD is neutral. RSI is at 43 and flatten. The only one that it keeps pointing downwards is stochastic, but we need to see this 1 hour candle closing below this latest bottom. So we need to see a strong bearish candle in it's a half an hour from now. So yeah, we need a confirmation over here. It looks a bit, the decline looks a bit limited. Let me turn to the 30 minutes chart there. So down, 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 found the floor. So we need to see this floor break in order to suggest that it will start this drift again. So this is a 30 minutes chart. There is a lot of bearish momentum, but we need to see it breaking that support that it has this floor that it has found for the last hour. So not 62.70. A break of it, okay, closure of this candle, of the latest 30-minute candle below that territory, could open the doors to the, actually I'm gonna use I'm gonna use the extensions over here, so it could, okay, could open the doors to 62.70, even though that's a long way for a 30 minutes chart, but it could trigger a lot of selling pressure. So immediate support 62.70 and 62.60, 65, which is this latest down fractal. And let me just, I want to, the ATR, let me check what the ATR has to say. ATR for a 30 minutes chart suggests 14 pips movement. So 14 pips movement is down to, so let me do the maths, 0.6273 minus 0.0015, 14 is 60, 6260. 6260. So yeah, that's the next support level. If we see it breaking the 6270, that's the next support level, another 14 pips lower. Okay, while in the 1 hour chart, ATR is at 0.16, not 16, which is down to a few pips lower, somewhere here. But we need to see breaking this floor. Okay, we need to see it breaking this floor. Okay, guys, I'm gonna call it a date. Thank you very much for attending. Hopefully today's sessions helped you. For those that are in GoToWebinar, we're gonna receive a recording as usual. For those that you are in social media, the recording will stay there, either if you are in Facebook, either if you are in YouTube, either if you are in LinkedIn, Twitter, etc. The recording will be there. So feel free to watch it again if there is anything that you need to figure out. Have a great day ahead. Take care because we have, Canadian data are already out. Inflation still on, higher than expected, similar with what happened in UK. So inflation pressures continue. So that could suggest a boost of Canadian dollar because it implies to further tightening from Canadian bank as well. So let's wait and see. Let's wait and see. Thank you very much. Have a great day ahead and take care. Bye bye.